What's up everybody, welcome back to the channel. I'm Shawn GILL CPA with Neutron Tax, and today we're talking about how many LLCs you need to have if you're investing in rental real estate and other investment property. But before we get into that, make sure you give this video a thumbs up, subscribe to the channel, and turn on post notifications. It really helps the channel grow, and it also keeps you up to date with whatever I post on the channel. So a question I get often is, Shawn, I have a few rental real estate properties, or I have one property and I'm looking to get another one. How many LLCs do I need? Do I need another one? Can I put them all in one LLC? Do I need any LLCs? What's going on? Can you help me? Now, being a question that I get all the time, I have two sets of answers I can give you. One, I'll give you the perfect world, best answer, and then the realistic approach. So in a perfect world where time is no issue and money is no issue and you just have unlimited resources, yes. The best case scenario, the best strategy is to have a separate LLC for each property with a separate checkbook for each property, so separate bank accounts, separate debit cards, separate credit cards. This helps you keep track of all the income and all the expenses correctly for each property. This is the gold standard. This is what high-level investors do and what you should aspire to do. Now, of course, in the real world, we have limited time, we have limited money. We kind of need the more practical approach. And I'm going to give that to you, but before I get into that, I need to tell you why you should actually even have an LLC for your investments. So the reason you want an LLC for your investment property is for asset protection. You want to separate yourself from the property. And the reason this is because let's say a tenant or a contractor slips and falls, gets hurt, something happens at the property, and they want to come after you. If that property is under your personal name, they can come after you directly and all of your other assets. This could be your personal house, your car, your life insurance policy, your stock portfolio, your spouse's assets, your kid's college fund. It could be a number of different things. But if you have that property in an LLC and away from your personal name, you create a wall there. They call it the corporate veil, right? It's harder for them to pierce the corporate veil, as people say. This keeps your assets separated and contains those issues. So let's say in that same example, a tenant or contractor got hurt and they decided to come after you. They can only come after that LLC, which contains just most likely that property and the mortgage on that property. That's it. That's all they can come after. They can't get anything else. That's why you want to have an LLC. Hey, good news. If you actually need help forming a new LLC for your real estate portfolio or planning around the different entities in your real estate portfolio, turns out we can help. You can book a call with me directly at the link below. We'll have a quick call, figure out how we can help you and if we're a good fit, and go from there. So overall, it's just safer and wiser to be cognizant of that threat and get ahead of that and put the property in an LLC and separate your personal assets from the business and the investment property. Now, with that being said, let's talk about that more realistic approach I mentioned earlier. Being at the gold standard takes more money, takes more time, and more importantly, takes a lot of headspace to operate in that manner. You really got to have a lot of admin time and energy on your hands to be able to account for all the different bank accounts, LLCs, tax return filings, all sorts of different things, right? So the more realistic approach is to group assets together with some sort of logic. So let's say you have a couple single family homes. Let's say you have a short-term rental, so an Airbnb or a VRBO, Verbo, whatever you want to call it, and a multifamily and maybe a hotel. Since those four different things are different types of real estate properties, I would give each of those their own LLCs. Now let's say in that first example with the 3 single family homes, you may want to set a kind of net worth threshold to keep to an LLC. So let's say you decide maybe $500,000 to $600,000 is the amount of risk you're willing to take with an LLC. That means out of those 3 single family homes, maybe that's 2 houses that each are worth $250,000. You put those into a group LLC together. Maybe that third house is worth $850,000. You may want to put that one in its own LLC. Or maybe you just have 4 $150,000 homes somewhere in the Midwest. Those can most likely go in one LLC together because the actual dollar risk is fairly low. Now, there's no hard and fast rule with how much money you should be willing to keep in one LLC here, like how much of a net worth risk you want to take. I would consult an attorney for that. It could depend on the specific state you're in and that state's rules and regulations, and maybe there's case law that shows a certain threshold is better than another one. So that's something you can discuss with an attorney. But in general, you want to follow this sort of structuring methodology. So keep certain things separate, right? Multifamily apartment buildings, you don't want to throw that in an LLC with a bunch of your single family homes. Or a short-term rental is its own trade or business. You don't want to have that in the same LLC as a long-term lease, a long-term tenant that you have, or with a multifamily or with a hotel. Keep that separated as it's its own business. But things that are similar can be put together, especially if they're around a lower similar dollar value. The higher value an asset, the more you want to separate it, and you want to keep things this way until you get to that next level of your investing career where you can follow the gold standard and separate everything in the future into its own LLC with its own bank accounts, cards, checks, and so on and so forth. By the way, these LLCs in most cases will not affect your taxes. There's more advanced tax strategies out there that can help you lower the income related to your rental properties, and if that's something you're interested in, feel free to contact me with the link below. We can have a call one-to-one and talk about those strategies. But for the most part, these LLCs will not benefit or negatively impact your taxes. Actually, I have another video on that, which you can find by hitting the link in the cards above here. I hope you've enjoyed this video and learned something. I will see you in the next one. So that was the end of this video. If you liked it, please give it a thumbs up, subscribe, leave a comment. It helps me grow the channel. If you need help with your taxes, you can book a call with me directly at the link below in the description, and you can also sign up for our email list. We only send out an email about once a month, and that's everything I need to tell you. So I will see you guys in the next video. I'm out. Peace. Have a good day. Appreciate the views.